Hello everybody, welcome back. Let's have a look at COTI then, shall we? So I suppose one of the coins that stuck out for a little bit on their live stream last night. So we do these live streams for Patreon members. Do them twice a week. If you're interested, there's links in the description. Otherwise, just join the Telegram chat. That's all free. Yeah, we've been watching this one coming down for a long period of time. We had a double top over here, and since then came down into this buy zone. So the buy zone being between 29 cents and the top area being 34 cents. So quite a wide area. And we actually spent a bit of time accumulating in there as well. Now, the market is still relatively undecided, I have to say. And as we enter into the new week, because it's Sunday today, moving into Monday and all of next week, it's going to be a pivotal moment really in how the rest of the market, traditional markets, commodities, stocks, everything including crypto is going to behave. But we did break down ever so slightly the dollar index, right? And even though the dollar is strong, and we've been watching this uptrend for several months now, there are a couple of signals at least, based on the Itchy Cloud, to suggest at least this last portion of the rally has come to an end. Doesn't mean that the entire rally or the uptrend has come to an end, but it means that the strength of trend is kind of slowing down. We are at a super support now, though, so I would expect a bounce at least on here just to start with. But overall, the majority of this trend, I believe, has fizzled out. And although we might stay within the 95 to 97 area, it's likely to sort of cool off, I think, now. So we've got our exit signals for the trend which began down here. So entry point, now we've got an exit point just based on that indicator. It doesn't mean it's a short, or it doesn't mean it's going to come tumbling back down. It just means that it's going to cool off potentially for a little bit, maybe go sideways within that range. So, now that I've bored you to death, you're probably not there anymore, but if you are, COTI looks like it wants to try and recover, right? So it's early days. This is the daily, so we're above the 200 exponential, we're above pretty much all moving averages apart from this 50 exponential, which is where we're struggling, and yesterday and today to break. We did have a very strong reaction here. Now, I don't know if that was some kind of fundamental development or whatever, but whatever it is, it's actually helped the chart do quite well. So we've pushed ourselves all the way above the 200 exponential on the 4 hourly, and this is the problem that most crypto is having. If you really want to start an uptrend, this is your first thing that you need to reclaim, a 200 exponential. Normally it poses as either a support or a resistance, and it's a pivotal moment when you either reclaim it or drop down below it. The drop down below it here, followed by a death cross, caused quite a large breakdown. Overall of 50%, and again, this is a 4 hourly chart, so 4 hourlies do yield some decent moves, because crypto is so volatile. So you have a tipping point really like this, and that's the reaction that you get. So you could look at this and go, well, we've got a golden cross here, why don't we get the... Well, I'll tell you what, it's because it's relatively contrived, but regardless of it being contrived, it did happen. We had a death cross. It looks as though we're going to follow that up with a golden cross, and this looks more like, if anything, like a bull flag. But you could also argue that it was a pennant or a symmetrical triangle, and this is how we're playing this currently. And so you'll be looking for this to either break out or break down. Now, the way that we like to talk about these, because you'll see formations like this all the time on, I'm sure, YouTube and Twitter and stuff, and it can be a bit of a red herring to think that it immediately has to break out. Like, the best thing about this is that it offers no particular bias. It can break out or break down 50% at the time. It has no particular bias at all. So the best thing to do is to wait to see which way it breaks out. And not only that, some people just think, oh, it's broken out, let's trade it because it has to go straight up to the moon. But it's not really how I would suggest do it. I would say, okay, so this represents a resistance, which is what it is, and this represents a support, which it does. So if we were to break the resistance, it doesn't mean that we can't come back down to support. It could. And the best trade would be that if we did break out from here, we come back down to test the support, which is still relevant, and then from that support, take a position. Because at this point now, we don't have a resistance above us like we did previously. We just have the support. And it's more likely that if that happens, you'd get an instant gratification trade that takes on an uptrend, rather than trying to trade a breakout, which can often get sold into, come back down, and then launch from there. Again, this none of this has to happen, but this is what I would suggest do if you were looking to learn about trading or learn about formations. The idea that we break straight out and go crazy is usually unrealistic. It's more often than not we break out, fake out, accumulate, and then take on the uptrend. So this one looks quite good. I like it, and that's your 4 hourly, and that was your daily. And then finally, we'll just go to the weekly to see how relevant that is. And the weekly, if just get rid of this nonsense over here, we are trying to, at the moment, as far as this, oh dear, what's going on here? As far as this candle body right now is concerned, you know, we've been rejected from the 20 weekly, so that's no big deal. That's where we were rejected last week. It's a strong area, and this is a main area for a pivotal area to be reclaimed. Being above or below a 20 weekly is in favour, you know, in the smallest term, in the smallest percentage, in favour of that section of the Bollinger Band. So what I mean is that we're 65% more likely to stay within this zone if we're below the centre, 65% more likely to stay above it, you know, if we've crossed the line. So given everything that we've looked at so far, we're not looking for this to break immediately, but we are looking for it to break. And I would say that given that the market kind of looks a little top heavy at the moment, waiting for that formation to play and to treat that formation with respect is probably your best course of action. But COTI isn't that unappealing. It actually looks quite good. But again, you would be trying to catch knives by buying into it today. But again, I'm not a financial advisor. None of this is financial advice. But I do like the way that COTI is shaping up. It's got a good reaction from the buy zone, which is one of the main things you've got to focus on. That's why we plot buy zones in the first place, isn't it? And also sell orders at significant tops. So the buy order was very well respected, and an enormous move took place within the space of a single week, a 60% move. So it's not all bad for COTI holders. In fact, this one looks like it could be at the beginning stage of a full-on recovery. Right, I'll leave it with you there, guys. Thanks for watching. I hope you have a nice day. Take it easy.